Hey traders, this is Ron Haid. Hope you guys had a fantastic day today. As always, everything in this presentation is for educational purposes only. All right, there was no video last night, but there's no change in the market trend right now. We remain bearish on the daily chart. If you look at the S&P 500 ETF on your screen right now, the SPY, I told you guys to keep an eye on the orange line, the 50-day moving average. We got close to it yesterday, but this is counting as a rejection. A failed attempted rally, and we're rolling right back over. In fact, we gave back half of practically yesterday's gains. This is not a good sign. What I could do here too is just draw in a box and show you exactly, look where we are. We never broke out of this box. And this is still the flagpole, here, and this is your flag. So bears still have the edge here. It's still going to be a key metric on the upside here this 50 days. So keep an eye on that as of right now. You probably guessed it, the targets is just like I've been saying in the videos, back down towards 282.50. If we take a look at the Dow ETF, the diamonds, similar situation with a rejection, but it was even lower. The Dow is weaker than the S&P right now. It couldn't even get back up to the 50-day. It got rejected at the 20-day yesterday. Today we rolled over, took back practically half the gains. This too is a box downside target. You know, watch those lows around 253 or so. Look at Qs. Zoom in here. Qs are rejected at the 50-day moving average. If I zoom in really closely, the 50-day was 188.46 yesterday. We closed at 188.43. We were still 3 cents below it, or essentially on it, right? But we couldn't get above it. What happened today? We hit it again and we rolled over and closed back below the red line. This too is bearish. Now it's looking a little better than the Dow, but the downside target of 180 still would be in play. Overall, bears still have the edge. Here is the VIX. If I zoom in, we're still below the red line here. Overall, though, this is still bullish. If we get back below the 50-day, that would be more bearish for the VIX. The VIX started to roll over. Today we get a bounce. Just like the markets rejected at resistance, we just have to see how this plays out. Bottom line, rest of the week, Wednesday, Thursday, Friday, caution is the word. Bears still have the edge of the daily chart. And then looking at Apple, how goes Apple sort of is how goes the market. Back-to-back reversing candles here. We tried to get back up higher, fell lower. Tried to get back up, fell lower. This is overhead supply now, still knocking this down. However, even though we came off the highs, finished practically, well, today we did finish at the lows, we're still up on the day, barely. So that is a net positive. Apple would have to get below the orange line for it to turn bearish on the daily chart. How about gold and silver? Just a quick check-in. It sold off, Monday, bounced back. This is still bullish. I would say anything above the red line, which is the 20-day exponential moving average, is considered bullish. Look at silver, SLV. It had a nice little update today. Again, use the red line is what I would do to consider an end-of-day trailing stop in a paper trading account as always. And then one stock to watch here is Avaya. Avaya was up 12% today. It was one of the biggest gainers. Big volume. We blew through yesterday's closing price. We had a huge high wave doji showing something. There was a lot of indecision. Well, today that indecision was resolved. Zooming closer, we moved up considerably, 13.95. The gap down point would be initial target mid-16, 16.5, and then up towards the gap fill just north of 18. Here too, I would consider a 20-day EMA and red as a trailing stop. For fun, you could use an 8-day EMA as an end-of-day trailing stop too, even something shorter, again, in a paper trading account. So that's it. Nice short video tonight. Not much is changing. Bears still have the edge. I'll be back with you in tomorrow's video. Take good care.